Friday, the AI trade looked dead. Every level we tracked for a month was broken. This morning, AMD got a $665 price target. Memory chips jumped 5%, and by lunch, QQQ was back above 700. SPY was kissing 747, and SMH was trading through 567. Everything changed by end of day. Stick around to see the levels that we need to look out for in the week ahead. Taking a look at the Dow for the day, we closed down 0.59%. The Nasdaq initially gapped up about 1% but closed pretty much flat, and same with the S&P. We closed 0.19% down, and the Russell 2000 closed down 0.58%. Mainly the gap up was due to chip stocks and memory names catching a bid through the weekend, but everything and all the gains were given back once Trump gave his good old tweet to kill markets. An American soldier was killed, therefore Trump proceeded to threaten the Iranian regime, and this spooked markets into fizzling away the majority of today's gains. Another thing to note is U.S. Treasury bonds are on the move once again, with the 30-year Treasury topping 5.117, along with the 10-year U.S. Treasury topping 4.596%. Both of these will continue to put pressure on high beta names and the stock market as a whole. And remember, our line in the sand is anytime the 10-year Treasury is above 4.5% and the 30-year Treasury is above 5%, you're going to see turbulence within the high beta names, especially within tech. Taking a look at the QQQ, the NASDAQ 100, let's look at some main levels here. On Friday, I said everything is the 700 to 702 retest. It came on day one of this week. The QQQ gapped up over Friday's close and ran to 705, but ultimately was not able to hold on to those gains and finished the day slightly up, pretty much flat, just 0.10%. You can see immediately that we were rejected off of the 50 EMA illustrated by this yellow line here. It's not what we wanted to see, as bulls are clearly not in control of this tape as long as we can't get back above this line. Another thing to notice is volume is fairly low, honestly towards the lower 50 percentile of this entire range that we're looking at here. And we're looking at the 1 year, 1 day chart, just a bit zoomed in, starting at the end of April towards the left side of the screen here. We can still see all moving averages are still continuing to slope downward, and I don't like this inverted hammer type candle where you can see the high of day was clearly rejected, and ultimately we closed the day even on the day. In order for the bulls to get back in charge, we need the psychological level of 700 to be reclaimed and held, along with the 50 EMA at 705 to be reclaimed and held. A lot of these moving averages are very bunched together at this time, so we can expect a very large move to be on the horizon very soon. We did, however, on Friday session hold a very key level, which is 686, and we can see the significance of this level is the June low. If this is the low within this next sequence of price action, we can look to see if there's going to be a higher low put in place. Is today's low the low of the week of 696, and we can continue higher going into the Tesla earnings midweek? That's yet to be seen, but in my opinion, unless we lose 686, this trend can still continue to melt higher, and we can find ourselves towards the 725 range at Friday's close. But now let's take a look at the SPY, the proxy for the S&P 500. When looking at this chart, we can say that this is the quietly bearish chart of the day. Friday, SPY retested the 747 shelf from below and died at 747.29. Today it tried once again, and we were ultimately rejected. That's 2 rejections in 2 sessions. Across the board, markets gapped up this morning but couldn't hold gains, and when we look at the S&P, we were not able to close back above the 8 EMA or the 20 EMA. It's looking like more and more price wants to come back down towards the 50, which currently resides at 738, and if that level is not held, we can expect buying pressure to show up at 730.95. Overall though, we can still see that if this is the low within this sequence, this was a higher low, and if price holds at its current level, this could be an equal low. Going into Wednesday's earnings for Tesla, later in the week we also hear from IBM and Intel. This could give more push to the semiconductor and AI trade and can send price back up ultimately towards 750 level. That the 750 psychological level is where bulls want to be able to reclaim and hold. It's going to be a big one. And mind you, if we get there, we're only less than 1.5% of the all-time high at 760. So although today does look a bit bloody with the rejections and ultimately fade into the close, we're not totally dead here. We're continuing to trade within this tight range between this SPY and QQQ. So let's hang in there and see where price goes towards the end of the week after we get earnings from some of the Mag 7 and chip manufacturers. Now let's take a look at the SMH, the ETF for the semiconductors. Today, mainly a flat day. The SMH was unfortunately only able to close 0.41% up. You had a 16-point intraday price range. The 16-point rally ultimately died exactly at the first resistance on the board, which was the Thursday low, and ultimately a gap up that faded at the first resistance and then bled all afternoon is a textbook rejection. Mainly you do want to see the 50 EMA that currently resides at 580 and the 8 EMA that sits at 580 as well be retaken, reclaimed, and held. Then once we get back up to 581, you want to see the psychological level of 600 be able to be held as well. Until then, the longer that we trade under the 50 EMA, the more at risk we are for the 511 level to be retested as support. Ultimately, names like MU and SNDK gapped up in the morning, went up almost 5 to 6% intraday, and then faded into the close and were only able to close between 2 and 3% gains. Another stat to notice though, just like the S&P and the NASDAQ, is current volume on today was extremely low, so participation was not there by any means. You had Friday's volume coming in at 22 million shares was the volume for Friday's candle. Today's volume came in at a measly 6.8 million. So you have nearly a 60% drawdown in participants. This could be due to the laggard of the summer months and volume really drying up. But I think that is another metric for us to watch, that although we did fade, market participation was not there by any means.